Good
While I
afternoon.
So I
I am
keep my
Good
Shelita
screen in
Gray.
morning and
place.
welcome to Illinois Ignite. This is our second go round and we have the amazing Shelita Gray and we are about to talk about booking basics. Shelita, you have the floor.
Good afternoon, everyone. I am Shelita Gray. I am an accountant of 30 plus years. I want to tell my age, but I've been in accounting in the not-for-profit sector for most of my career. Um, and currently I am the director of finance for a school district. Um, and accounting is my passion. I also love to help people. I've done budgeting classes, as I'm doing a budgeting class in this series also. Um, Taxation, just all the things that deal with numbers. So I hope you get something out of this class. I don't know if some of you all are um, returning students, or if you're new to the class, but feel free to ask questions as we go. In any way that we can help, we would like to help you all. So today we will be talking about the accounting essentials, keeping your books in order. I will share my screen so you can follow along with the agenda. So what we will be talking about is just the bookkeeping basics, financial statements overview, cash flow management, choosing your accounting software, and when to consider help. So those are the topics that we'll be covering today. So as far as bookkeeping basics, some may ask, what is bookkeeping? And bookkeeping is simply the process of recording all financial transactions for your business. It can include tracking the income, the expenses, the assets, and the liabilities. And it is a very essential part of a successful business. So accurate bookkeeping will ensure that your books stay balanced and helps with tax preparation and financial analysis. So that is the basis of bookkeeping, just keeping all your monies in the right places, making sure things balance, and make sure that you're using your money correctly. Key terms in the basics of accounting are assets, which are what you own, and examples would be your cash, any equipment that you have, land, any inventory. That's what an asset is. Liabilities are what you owe. So that would be loans, bills, any outstanding bills that you have. Equity is the owner's investment in the business. So it's whatever you have invested in the business, that is your equity in your business. Revenue, of course, is the income that you get from sales or services or whatever you offer in your business, any monies that you receive for your services as revenue. And expenses are the cost of running the business. And that can be anything, anything you've purchased to make your business run. The basic accounting equation is just the assets equals liability plus owner's equity. So that is the basic accounting equation. I'm sorry. But before we move on, something that's not on here that we'll talk about is the chart of accounts. And when you're working the finance side of your business, you will have a chart of accounts that will list all the accounts used to categorize transactions for your business. And chart of accounts can be customized depending on what your business is, and it can be customized strictly to you. So it would include all of your sales, your revenues, your expenses like office supplies, accounts receivable, land. So in your chart of accounts could be several wages, taxes, any transactions that you use, and usually your bookkeeper will customize the chart of accounts to your business. And that way, once you start getting your reports, producing reports, it will have line by line, different categories of what you're using in your business. And keeping your chart of accounts consistent is easier for reporting. So that you know, once you get a chart of accounts, it's easy to know, okay, so I bought paper for the printer that goes to supplies, office supplies. Or, I'm paying employees, that goes to payroll wages. I'm paying contractors, that could go to a contractor expense, or consultants, or things like that. So that's what the chart of accounts will do for you. So stopping there, I'm going to ask you to classify. Anybody can come off mute and answer the question, and the classifications will be revenues, expenses, assets, and liabilities. So if you are making a rent payment, what would that be? Anybody can come off mute and answer in those classifications. Nobody?
Can you say the classifications again? Because off the
Revenue,
top of my head, it'd be liability, but
a revenue, an expense, an asset, or a liability, and you're paying your rent.
Oh, that'd be an expense, yeah.
Correct. Okay. What about if you're invoicing a customer? What would that be?
Revenue, wouldn't it?
It would be revenue.
Yeah.
Yes. And an office computer purchase, if you're purchasing computers for your office.
Asset.
Good, good, good. And what about a bank loan?
It's
That's my liability, right?
Good job, Jennifer. And what about a utility bill?
expense. Yeah, expense.
Expense, correct. Correct. Okay, so good job. You all are on the right track. So those are the key terms: the assets, the liabilities, the revenues, and expenses. That is pretty much the basics of the account, of accounting. I'm trying to see if I want to. Okay. Okay. Any questions so far? All righty, we will move right along. Next, we will talk about the financial statements overview. And the main financial statements that are used in a business are the balance sheet, which is the assets equals liabilities plus equity. So on the balance sheet are your assets and your liabilities and your equity. The income statement, which includes your revenues and expenses. And the income statement tells you what your profit or loss is, because you take the revenues, you subtract the expenses. If the revenues are higher than expenses, you have a profit. If they are lower than the expenses, then you have a loss, and the income statement will tell that story. And then you have the cash flow statement, which some companies use, some of them don't. And that will tell you your operating, investing, and financing activities as far as your cash is concerned. And how to prepare each statement, I mean, pretty much it's just using your chart of accounts and making sure that everything is categorized in the right categories. And once you put all of that in, and that's if you have, whatever you're putting in, whether you're using Excel as your software, keeping up with your expenses and revenues, or whether you're using a software. But once you put all of that in, then you can usually just press a button and spit out your financial statements. And hopefully, if you or whomever is keeping your books, if things aren't looking right on the financials, you should be able to see it quickly once you pull the financial statements and decide what needs to be changed, revised, or, redone. So next we'll talk about cash flow management and what is cash flow. And cash flow is the monies that are coming in and out of your business. And managing cash flow means just ensuring that the business has enough money to cover expenses when due, And with that will come cash flow forecasts, monitoring your collections, so you can plan for slower periods to avoid shortages. And when I say that, I say that because sometimes cash moving in and out of your business is seasonal, depending on what kind of business you have. Do you all want to share what your businesses are?
I have a daycare
Okay.
home.
Okay, home daycare, okay.
I have a dressings and sauces company.
Okay, okay. Anybody else? Okay, so even with those businesses, our home daycare, usually is run, around the clock, around it's not seasonal, it's year round, but sometimes it can be, there could be less in the summer because some people who send their kids to daycare may not work in summer, so that means that the cash flow could be lower in the summer for home daycare. And if that is the case, then when you're doing your cash flow, it needs to reflect that. Your forecast, you have to think about those things, when you're doing your cash flow to know how to budget things, when cash is going to be higher as compared to expenses, when expenses may be higher than your cash and you need reserves for those kind of things. So that is the importance of the cash flow management. And tools for cash flow management, again, are, well, your financial statements will help you decide about your cash flow management. Your invoices help to just, know how the cash flow is coming in. And bank statements, all of those things will help with your cash flow management. Also, historical data. So when you're looking to do cash flow and it's good to know what happened last year. So you have good financials from the prior year, what happened last year in this month at this time. Usually when I do financials for a company, I do a comparison. So I would have the financials, the actuals for this, say I'm doing them for September. So I would have the actuals for September 2024 and the actuals for September 2025. That way you can see what happened last year compared to what happened this year. And if there are large variances, then you can identify what the variances were and how to move forward in that situation. So having good historical data is very important for your cash flow management as well. Any questions regarding cash flow? And common problems that can happen during cash flow is sometimes customers may pay slow. So you have to decide when you're invoicing customers, if you are a company that invoices, some of them, like the dressings company, you may have large orders that you invoice, or you may get all of your funds at the time of service or time of receiving the product. But if you do invoice, you need to be sure to decide whether I'm sure you've seen an invoice that says net 15, which means that, you need to pay it in 15 days. Or you can be a net 30 company where I invoice you today, you have 30 days to pay me. But all of that impacts your cash flow. Because if you may not be able to wait 30 days to get payment, and there are also companies that invoice and it's due upon receipt. So due upon receipt is relative, because I receive it today and my check run doesn't happen till next Thursday, then you'll get it, I'll cut it next Thursday, then it has to be mailed and things like that. So you have to consider all of these things in your cash flow when you're going to get the cash, what your overhead costs are, because a higher overhead cost can be a problem for cash flow as well. So you have to consider that when you are deciding on how your money will be spent, and overspending on inventory. And I've seen that happen a lot, where if you don't have good historical information, or you're not using it, you may think, oh, I'm going to sell 1,000 pieces of this product, and you buy 1,000 pieces and you sell 300 pieces. So now you have this overage of inventory that is affecting your cash flow, because though you've spent the money on the inventory at this point, it's not needed. And you may need to do some more selling to make the money to purchase the inventory. So all of these things are important when you're considering cash flow. Improvement strategies that you can do is, like I said, send your invoices promptly, and be sure to have your invoice, what you choose to net 15, net 30, due upon receipt. The timeliness of your payments, that is very important. You can also offer small discounts for early payment, and that a lot of times prompts people to pay earlier, even if it's like a 2% discount for 10 days payment, a 1% discount for 15 days. You'd be surprised how many people will pay early just to get that small discount, because of course they're looking at their cash flow as well. So any little discount will help. And negotiate better payment terms with your vendors also. So if you are purchasing, your product or inventory from other vendors, then you may negotiate the terms of how you pay them, because some of them can be paid on a 30 or 60-day term, and that can help you bring in cash flow to be able to pay out. So all of those are improvement strategies for having a successful business and a good cash flow. Any questions there? Okay, so now we'll talk about accounting software. And I've talked to several businesses that they will ask you for a quote to do accounting for them and do business with them and help them with their accounting software. And a lot of times after you give them the quote, they don't want to go with it. So some people just use accounting software instead of having someone to help them. And in choosing accounting software, you have to be mindful, you have to be careful of the software that you're choosing, because if you're doing it yourself, you want to be able to understand how to use the software. So a software that is easy to use is a good thing. Also a software that integrates with your bank and other apps. That is very important, because when a software integrates with your bank, that does half of the work for you. Because what happens is, on a monthly basis, you can go to the software. It has a link that can upload from your bank, and it can pull all of the transactions that have gone through your bank for that month and pull them in, and then it can be reconciled that way. But that hopefully everything that you're doing is going through your bank account, through one account, that you have a business account and everything goes through that account. That makes life a whole lot easier, because it's all in one place. It's all captured on that bank statement. Anything you paid for should be captured on that bank statement. Anything that someone paid you for should be captured on that bank statement. So that could be if you're using a Stripe or a Square, when they slide, when they pay with their cards, it goes directly to your bank statement. If you're taking cash, it should be deposited into your bank account. The one thing I will say with that, and we've talked about it in the previous sessions, is where that gets messy is when you are intermingling funds. And when I say that, you're putting any of your personal funds, or if you're purchasing things for personal use, with your bank, with your business credit card, with your business debit card, with your business checking account. that's when things get messy, and it's really hard to differentiate what's business and what's personal. So one thing we have been saying in almost every one of these classes is please do not commingle funds. Even if it's one of those things where, oh, I just left home, I need some gas, and I do not have my personal card, so I'm just gonna put it on my business card. Or I'm hungry and I want, it's not a business meeting, but I'm hungry and this is what I have on me. Those are not good practices. And your accounting software cannot differentiate. And even if you have an accountant, they can't differentiate if it's a personal or business. So the best thing to do is keep your personal, and keep all of your business expenses together. Another thing in choosing the right accounting software is the reporting capabilities, because you want it to be able to give you good reporting, easy to read reporting, and reporting that you can understand, that kind of just breaks it down. Whatever you're putting in, you can get it right out if your accountant needs it, or if you need it for grant purposes, which a lot of small not-for-profits may need reporting for grant purposes, or if you need it for tax purposes as well. You want to have good reporting capabilities as you put your information in. And the next thing is the cost. And again, a lot of people don't want to use they don't want to subscribe to any software because it may cost a little more than they would like. But I would suggest that you budget this cost into your annual budget, because it is very important. And it costs more on the back end if you don't have good software and don't have good bookkeeping. Trust me, there are horror stories. I'm sure Ann can tell you some where it costs on the back end when it's time to do your taxes. And you rather just pay upfront a monthly fee for a good accounting software than have to pay on the back end. So those are features that I would suggest you look for when you're looking for an accounting software. The softwares that I've used the most for small businesses are medium to large is QuickBooks. QuickBooks it's pretty easy to use. It has great reporting that comes out of it. And there are a lot of people that use QuickBooks, so it's not hard to find some help if you need help. Other softwares that are available for that is one called Xero, which is a cloud-based software. I've not used it, but I've gotten good reviews from it. Also Wave, and Wave is a free software for small businesses. So that may be another option that you can use, Wave, for your business. And as you grow, then you may have to change things as you grow. And then Zoho Books, it's affordable and it's a customizable software. So that could be helpful too, depending on what your business is, because some businesses have a unique niche, and you may just need something that can be customized to your business. But choosing the right software to fit your business is very, very, very important. Any questions there?
Yes, Sheila, I do have a quick question. Are
Okay.
there any of the you know how there's CRM systems, obviously, for kind of tracking and managing your pipeline, your funnel and stuff like that?
Mhm.
Are there any of the CRM systems, I guess, that interface better with these software, accounting software systems like QuickBooks? So once you have a lead or something like that, and then they obviously, let's say then we turn them into a customer, then we can just pop their information from the CRM system immediately over into the accounting software, and it will populate their information and data over there? Or is that not a thing?
That is a good question. And do you have any response to that? I am not sure.
No, I haven't had anyone that use CRMs to do that analysis or that type of analysis work or the correlation. Normally, it's just that they have their QuickBooks or their information coming from their bank statements.
Mhm.
And that's about it.
I can step in. Hi guys, it's Antoinette.
Hi.
And using QuickBooks does have an interface that allows you to add a CRM system to it.
Okay.
So if you go in QuickBooks, you have that option now.
Oh, that's good to know.
Oh yeah, that's awesome. Yeah, I was thinking somebody who I had overheard some people talking about, yeah, the possibility of doing that, but I wasn't sure, yeah, which one
Mhm.
it was. So, okay, awesome. Yeah, I'll look into that more because I mean, it sounds magical, but you know how it sounds and how it functions sometimes, as we all know, we're like
Absolutely. Those can be
19 worlds apart. So, okay,
those can be two different things. You are exactly right. Um, okay. Also want to talk about when to consider professional help. As I spoke earlier, we have had lots of people that reach out and ask for help with their business. They want to set up, they haven't been doing things right. They've had tax issues. They want things to be done correctly. And can we help them? And we may sit down and go through the whole business model, look at the financials, talk to them about it, and tell them what needs to be done. Give them suggestions on how it needs to be done, that it needs to happen monthly. And then we get to the part about how much it'll cost for us to do the work on a monthly basis, and then we don't hear from them anymore. But we've told them, that it's needed because most people, you're in your specific business. You sell dressings, you do a daycare. You are not accountants, nor do you have that skill, nor do you have the desire to want to do that. So it is imperative to have some professional help that you can seek, or someone that's professionally handling your affairs, especially as you get to a certain level in your business, and sometimes a lot of it is about timing. When you're focusing on your business, you don't have time to focus on the financial side of it. So signs that you may need a bookkeeper or an accountant is that your transactions are just becoming too complex or too large for you to handle. And that can be payroll, because when you're doing payroll, you have to consider the payroll taxes that you have to pay as a business, and that you're giving employees. So there are taxes that have to be paid every time payroll happens. And some people don't take out taxes, they just use contractors. But when you're doing that, then you have to make sure that you're providing 1099s to your contractors. And then you have to keep up with the rules and regulations that go with 1099s. You have to know when the dates are that the 1099s need to be filed, and when you have to have them to the contractor. So there's just so many different pieces in the financial sector, on the payroll side, on the financial side, just to ensure that you're doing the right thing. If you have a business where you're selling things, then you need to make sure you're paying the sales tax on a monthly basis or a quarterly basis. And you need to know how to calculate the sales tax and how much you should be considering, or, so all of these things are important in the business. And that is what your bookkeeper or your accountant keeps you on track to do these things. Your books could be taking up too much time away from running your business, which I said earlier. Usually when you have a business, you're focusing on, what your business is for, the purpose of your business, and you don't have time to focus on the bookkeeping side. And then oftentimes people feel like they have time to focus on, they can do both, but then they get lost. They get lost in the sauce. You say you're gonna do it, and then that 1 month goes by, and you're like, I know I have to do it, and then you look up and it's 3 or 4 months later, and your books haven't been reconciled, things haven't been paid in 3 or 4 months. And when you're doing payroll in-house, taxes have to be paid like the day after that you've done the payroll. And if they aren't, and when I say taxes, I mean the payroll taxes that you're taking out of the employees' checks, the employer has tax liability as well. And if you're not doing that, then there's penalties that are being incurred day after day. So those things, it's not worth it. And also you need tax strategy or financial planning help, and that is what a bookkeeper can do, an accounting professional can do for you. And even just those one-off questions that you have, every now and then, it's nice to have somebody's name and number in your Rolodex that you can reach out to for these things. And I know a lot of people say that they can't afford a monthly a bookkeeper or accounting professional. Even if you can't afford monthly, you can get on somebody's quarterly calendar, that you may pay quarterly. You meet with the tax accountant or an accountant, period, quarterly, and they can look at your books on a quarterly basis and let you know what's being done right, what needs to be done differently, and things like that. And yeah, so those are the reasons that you would need to look for professional help. Would suggest that you, ask about their industry experience to make sure that they've done accounting for the kind of business you have or somewhere in that realm. Checking references and reviews is important. Because you just, want to have the right person that can focus on your business and be helpful for you in that realm. And that will help you to have a successful business. Any questions there? Any questions about the financial statements and what you should get out of a financial statement and what you should look for? No questions? This is a quiet group. Cash flow statements. Any questions about the cash flow statements? Okay, I would just like to reiterate about when you are doing your financial statements, historical data is very, very important. Comparisons are very important because even businesses that are seasonal, usually this January and next January, the profits, the losses, the expenses are usually the same, every month. Unless you may have one-offs, things like that. And I would say when you're looking at your financials, every now you may have a one-off, like they may be for the dressings, you're selling things like that, dressings and sauces. There may be a huge event that happens this year that you may make $4,000 or $5,000 or $6,000 from, but it was a one-time event. It's not happening next year. So when you're doing cash flow and forecasting things like that, you have to consider that in those types of things, in those numbers, and you have to pull that out. So say if you were doing a cash flow for this September and you're looking and say, oh, well, I made 10,000 last year in September, so I'm going to put that down. But you have to know the details of every month. That's another important thing of keeping good records, because you don't just want a number. You want to know what makes up those numbers. And when you're doing your cash flow, you don't want to just pull a number or just go 3% higher, but you need to know the detail of every month, of what makes up those numbers to know. Because if you know the detail, then oh no, I had an $8,000 event last year that won't happen this year. So I cannot consider that $8,000 in this year's numbers. When I'm looking at my cash flow, I won't get that money again this year. So then you have to either find something to fill that or match your expenses with 10,000 less than $8,000 for that month in this current year. Does that make sense?
Mhm. Yes. Quick question on that though. Just because that aspect of it, I guess, just for me, I don't know about anybody else, but the forecasting part of it is like what makes me just like super nervous because I'm just starting, and so I don't have historical data yet. So like once I kind of get it going, let's say, is it best to do forecasting like that like you were talking about, kind of like at a year shot at a time, kind of, but then
Yes.
go back and like, obviously, like when month is over, go back and edit it to the right numbers and stuff like that for that month. But is it better than kind of do it for the year and then maybe like quarterly, the quarter before, like the end of the quarter before the next quarter, go back and edit it and tweak it, like you said, kind of based on, oh, okay, I know this event is coming up, this event isn't coming up? Or how do you suggest we like timeline that out to make sure we're kind of staying on top of it? Because that's what gives me the most anxiety, if I'm being for real.
Understood. And if you're just starting off and you do more like festivals and events and things like that, I would probably do it on a quarterly basis because I have a client who does festivals, and so she's always looking for them, but is usually scheduled out at least 1 or 2 months, on a schedule of what she knows is coming up. And even if you haven't done the festival before, but you can gauge or you know what it's like, okay, this festival brings 10,000 people. Well, this is a small local festival. You may have 500 people. So you almost have to maybe gauge it like that by like the number of people that are expected to attend. How many units you are usually selling, and you have to you have to figure out, do you normally sell by, if it's 500 people, I sell this much, or if it's 100 people, I sell this much. And then that can be tricky because it depends on what kind of festival it is. It's so many different factors in your numbers, but I would probably start with just the calendar of the festivals that you have. What you hope, not, I don't want to say what you hope to sell, it's really a conservative assumption because you're new to it. But each month I would use that data. As starting off, you almost need to use the data on a monthly basis. So in June, this is what you sold. So then how many festivals do I have in July compared to how many I had in June? And then I'm gonna make an assumption of this is how much I plan to sell in July. And then, like you said, then you go back and you do the actuals versus what you kind of budgeted to sell. And until you accumulate enough data to start to make a forecast, a real forecast from.
Okay. Yeah, that makes sense.
Is it okay?
And along the lines with that, just kind of bigger picture question too, like for all of us, like if we are going to try to like apply for a loan or something like that, at some point, is it better to do it more like in the beginning when, you're still looking like okay and good and fine-ish, or is it better to do it, like after you have, some liability stuff going on, some asset stuff going on? Like, is there a better time to do it when you look better positioned as a business to take out a loan, or apply for funding or anything like that? I don't know if you can speak to that. Does that make sense?
Yes, it does make sense. I'm going to answer, then I'm going to ask Ann to weigh in. I would say it's better to apply for a loan when you have some financial statements to give the lender, because they want to see, what cash do you have? What kind of revenue have you pulled in, in the last 6 months, or what kind of assets do you have that, if something happened, like what do you have? And if you don't have any financial statements to back that, I mean, they can use your personal information as well. But I would say it's better to be at least maybe 6 months into, because you do at least have some historical data. You can show them, this is my business, this is what has happened thus far. And that gives them something to go on. And then even some credit with your business. If you have a line of credit or if you have credit cards and things like that, where they can see, that you have this credit, you've been paying on this, you're in good standing, things like that. So I would say you would need a little bit of historical data. And what would you say to that? Is Ann still here? Yeah, she is.
Sorry about that.
That's okay.
Yes, that is true. Yolanda, Cameron, or Andrew, are any of you guys on the lending team for JP?
No, actually, we're not loan counselors, but Shelita gave her great advice for what she should do. She can always apply and speak with the loan counselor, and they can answer any questions for her and ask her about her preparedness for a loan product as well.
Thank you.
Okay, wonderful. Thank you. Yeah.
You're welcome.
Who was the one that asked the question? What's her name?
Me, Jen Martin. I'm kind
Okay.
of starting to talk to people on the inside about all these things. So yes, so I will kind of keep following up with that. But also too, while you guys are on here too, in terms of helping us like build credit, you know, because obviously all this kind of goes with the accounting stuff anyway. I know obviously like getting a credit card, you know, is good, and just putting a little something on it and whatever to help us build credit. Does it ever make sense also to get like through our bank, like a secure loan, which is kind of goofy, I know, but you know, where you give them like $500, they put it in the savings account and then they just automatically like pay it every month to help you build like a quote unquote, you know, I guess like just kind of two different lines of credit, a secured and an unsecured for your business. Is that a thing, or do we not really have to worry about that part? Just do the credit card thing.
Jennifer, we have a credit, we have a component at our job called credit as an asset. And Bruce is the person that would love to assist you. When you get off of there, I think I have your email. I'll set you up so you can speak with him about the best ways to move forward with credit. Would that work? And anyone else who's
Yeah,
interested.
that'd be great.
Awesome.
Yeah.
I can do that. I'm writing a note now. And anyone else who's interested in learning about credit or what moves they should make for credit, Bruce's would love the opportunity to set up a meeting with you and talk with you guys. It's a resource that we have available at Justine Peterson, and all you have to do is sign up to get on his calendar, and he'll do a one-on-one with you. Okay. All right.
Jennifer, awesome. Those are really, really good questions that you're asking.
They really are.
Yeah. Any more questions? Okay, well, before we end this, I just want to reiterate the importance of accurate bookkeeping. It is very, very important to have a successful business, is to have accurate bookkeeping. Again, a lot of people they push it to the side, and not intentionally, but because they think they'll get to it, or they don't have the money to pay for it, or it's not that important. But it is one of the top three. It's in the top three of the most important parts of having a successful business. The financial statements are key. Like I said, when Jennifer was asking the questions, when you do go for a loan, that's the first thing they ask for is financial statements. If you have a business that's not for profit, if you want a grant, or if you're writing a grant, that's what they want. Please give me your latest financial statements, your latest audited, or if they're not audited, because you don't have to get audited until you're a certain size and certain threshold. But they want to see financial statements because it tells the story of your business. The importance of cash flow management, just not purchasing too much when it's not needed. Forecasting, looking ahead. Like we said, if you are someone that goes to events, then looking ahead and having a calendar of events and things like that to know what inventory you need, how much is going to be coming out, and if you have enough to cover what's coming in. And also, if you're someone who does a lot of festivals, then that can be seasonal. So you have to plan for the times where it's slow. Where in the winter there aren't as many festivals as there are in the summer. So you have to plan accordingly, save money in the, save more maybe in the summer than you have to save in for the winter months, things like that. And selecting the right accounting software, which is very, very, very important. And I would say with the accounting softwares, most of them have free trials. So you can just get a free trial and just put some of your information in to get it spit out to see if it works for you, if you think it will be easy to use, because sometimes software isn't easy to use, and you do not want something that you have to take so much time to try to figure it out, that it's taken away from things. So the ease of use of software, and when to get a bookkeeper, and initially when you're first starting, you may just want to consult with someone just to get the initial, information, the foundational information that you need to get your business started. But as you grow, please, please, please consider having a bookkeeper, in your pocket, because it will benefit you, in the end. And that is all I have for today, and I hope this was helpful to you all. I hope you got something from it, that can help you run your business, and I wish success to all of you.
Thank you, Shelita. That was awesome.
Thank
you for
you.
all
That
the
was
information.
good.
You're
It
welcome.
really was.
Thank
And
you.
I will see you guys next Wednesday, same time. Thank you again. This was awesome information that we needed, Shelita.
You're very
So
welcome.
enjoy your presenting. Okay. Have a
Hope to
great
see you
day,
all next
all.
week.
Yeah, me too.
Bye-bye.
Thank you, ladies.
Bye. You're welcome.
Thank you.
You're welcome.